So on May 1st, 2023, First Republic Bank became the second largest bank failure in United States history. But first, let us take a brief look at the history of First Republic Bank. So it was founded in 1985 in San Francisco, California, and primarily focused on providing banking services to high net worth individuals and businesses. In the early years, First Republic Bank focused on building a strong reputation for providing exceptional service and customized financial solutions. The bank developed a strong presence in the San Francisco Bay Area and gradually expanded its operations to serve clients across the United States. Now, fast forwarding again to 2023, when First Republic had been struggling to turn around its operations, when its stock started to fall on April 24th, the day it delivered a terrible quarterly earnings report, due in part to its substantial book of single-family mortgages that were acquired when rates were way lower. The bank carried billions in unrealized losses. In the first quarter of 2023, the bank lost roughly $100 billion in deposits, according to its financial report. Due to the collapse of the two other large regional banks, Silicon Valley Bank and Signature Bank, panic among customers of regional banks contributed to First Republic's demise. Deposits at First Republic had decreased by more than 40% from one quarter to the next to $104.5 billion. So briefly touching on Silicon Valley Bank, many became concerned the bank was short on capital after Silicon Valley Bank announced its $1.75 billion capital offering on March 8th. When word of the bank's cash shortage quickly spread on social media platforms such as Twitter, panic began to settle in rather quickly. So waves of customers began to withdraw large amounts of money, causing a run on the bank. On March 9th, following the news of a capital raising, Silicon Valley Bank's stock fell by 60%. On March 10th, regulators closed the bank and transferred Silicon Valley Bank to the FDIC. And quickly, First Republic Bank became the next target. In addition to having a sizable amount of uninsured deposits and facing liquidity issues, First Republic Bank failed for many of the same reasons as Silicon Valley Bank and Signature Bank did. Once Silicon Valley Bank and Signature Bank failed, First Republic started taking out loans from the Federal Home Loan Bank Board, also known as the FHLB, as well as the Federal Reserve, and received a $30 billion liquidity injection from a group of 11 banks as its deposits began to fall off quickly. Meanwhile, its stock price plunged from $122.50 on March 1st of 2023 to $3.51 on April 28th. And as of May 10th of 2023, the value of the stock is floating around 40 cents. So regulators took over First Republic and sold it to JP Morgan Chase on May 1st after failed attempts to persuade other banks to save it, making it the third US bank to fail since March. Now, JP Morgan Chase is already the biggest bank in the United States by a long shot, and it just became a lot bigger. This seems like another common case of big bank taking little bank. The seizure of First Republic resulted in the biggest bank failure since the 2008 financial crisis when Washington Mutual imploded. Back then, it was also JP Morgan that bought the failed bank's assets. JP Morgan is getting about $92 billion in deposits in the deal, which includes the $30 billion that it and other large banks put into First Republic last month. The bank is taking on $173 billion in loans and $30 billion in securities as well. The FDIC agreed to take on most of the losses on the mortgages and commercial loans that JP Morgan is getting, and also provided it with a $50 billion credit line. So over the next following 18 months, the bank anticipates spending roughly $2 billion on integration costs, while recording a one-time gain of about $2.6 billion. Furthermore, the acquisition will add over $500 million of profit annually to JP Morgan. Anyways, that's gonna do it for this video. I hope you did enjoy. If you did make it this far into the video, I appreciate it. Maybe consider leaving a like on the video. Also, maybe leave a comment on what you think of all these bank shenanigans. And be sure to subscribe for more videos just like this. Thank you.